Peloton's second quarter earnings and sales absolutely demolished the analysts' expectations because the at-home fitness equipment maker continues to see incredibly high demand for their products. Peloton's revenue surged 128% to $1.06 billion. Their connected fitness subscriptions surged 134% to 1.67 million, and their digital subscriptions skyrocketed 472% to 625,000. Peloton now has over 4.4 million members. Peloton also raised its full-year outlook, estimating that revenue will top $4 billion this year, up from the prior estimates of $3.9 billion. So, not a huge jump, but anytime you beat what the estimates want, that's always a good sign, right? The primary concern with investors about Peloton is the ongoing issue of supply chain. It's been struggling to keep up with demand, which is obviously a good problem, but still a problem nonetheless. They also said that their near-term investments into fixing the supply chain will weigh on their profit margin. Peloton customers have been dealing with delayed delivery for their bikes for months. And this is nothing new. This has been going on for quite some time. And while Peloton has said publicly that they are doing what they can to make changes to the supply chain, changes like this are not going to happen overnight. And they will require a boatload of money to fix. While we have significantly increased bike and Bike Plus production over the last several months, we remain inventory constrained with longer than acceptable wait times for the delivery of our products. So they clearly know that there's a problem, and here's what they said about how they're going to fix it. To directly address the situation, we will be incrementally investing over $100 million in air freight and expedited ocean freight over the next 6 months in order to improve our order to delivery windows. So it doesn't sound like building the Pelotons is what's causing the delay. It sounds like it's actually shipping, which again can be fixed fairly easily, but that doesn't mean it's going to be fixed quickly, which means that this concern is an issue in the short term for the stock. Because at the end of the day, this will put a dent in profitability in the short term. But for Peloton, it will be worth the upfront costs to foster the long-term relationships of its members who pay a monthly subscription fee. As I mentioned earlier, Peloton now has 1.67 million connected fitness subscribers, which is up 134%. The company expects to have 2.28 million connected fitness subscribers by the end of the year, which was more than the previous outlook of 2.17 million users. In the last 12 months, Peloton is up a ginormous 406%, while the past 6 months it has risen 116%. Peloton's retention rate for current customers remains strong, which is a good indication for the company. Which begs the question, how much gas does Peloton's stock have left in the tank? Because I think my biggest question/concern about this company moving forward is not the supply chain issues. It's did this company benefit and grow as big as it did because of COVID? Is this a COVID stock? What is going to happen when life opens up? Whenever that happens, I don't know. At the end of the day, you have to make up your mind on whether or not Peloton is a strong stock post-COVID. If it is, then this feels like it's a good stock for you. And if you believe that Peloton will just simply go by the wayside once COVID is a thing of the past, then this stock isn't for you. Let me know your thoughts down in the comments below. Are you currently holding Peloton? Are you interested in Peloton? Do these earnings numbers do anything for you to maybe want to buy the stock? Let me know in the comments below. Like and subscribe to the video. I would really appreciate it. And as always, I'll see you next video.